Hello, everyone. Happy Sunday to you all. It is Colby, the DGI Crab, September 7th, 2025, here to talk to you once again about undervalued quality stocks in the market. This channel focuses on a total of 60 high quality dividend growth stocks with a long track record of consistently increasing their dividends year over year for the long haul. I'm trying to acquire passive income through those dividends that is constantly growing. So when I get to the point where I've got enough money in financial freedom coming in through those dividends, I will be able to retire and not even have to worry about reinvesting dividends anymore because I should be getting nice income raises every single year for the rest of my life. That is what it's all about, you guys. How do you know what stocks to buy at any given time? Well, I am here to discuss that with you. Now, I'm not a licensed professional, so please don't take this as investment advice directly. I'm here to give you some ideas, but you should always do your own due diligence before you invest your hard-earned money. Now, I believe the most important metric to follow when you are a dividend growth stock investor is, well, it's your age. It's your timeline to retirement. The further you are away from retirement, the more years you have to invest. Probably the more you should be concerned with the growth of the dividends overall. Share price as well, but certainly dividend growth. As you're getting older, shorter window to retirement, you start getting that higher yield stuff with a slower growth rate. So that way you can turbocharge your investing to get you to financial freedom a little bit quicker, but maybe not as much dividend growth overall. Now, I'm looking for the stocks that are going to be yielding 30% or more above their 4-year average yield. I'm going to put half my money into ETFs. I do have my personal top 10 favorite stock lists. Sometimes I'll buy to and add to positions and shares of those stocks regardless of what the value looks like. I don't really do value investing with these particular 10. And I've broken my stocks down into 4 categories or tiers that are based on the age and time horizon of the investor. I'm going to remain in my personal age tier for the most part, unless I am going outside of that tier to get a stock yielding 50% or more above the 4-year average yield. And finally, if there's not a buyable stock in my tier, I'm going to double down on ETFs, put more than 50% of my new money into ETFs for that particular week. And guys, I'm just going to tell you the timing on this. In terms of purchasing ETFs, this could be a great week to do it. Before I jump into the spreadsheet, I will just ask you guys, please like and subscribe if you haven't done so already. I'm closing in on that 1,000 subscriber mark, which is pretty exciting. And when you do, or for anyone that's available, take a look at the playlists on the channel. I try to keep these really well maintained, so if you guys are looking for investment discussions or videos on certain categories, you can find them really easily. Check out the great ETF race from investing in only ETFs in an all ETF portfolio. Plenty of things in here in terms of questions from the audience that I have done videos on. Email me your questions at dgicrab@yahoo.com. I'll always respond to you with an email, but I might also, with your permission, make a video on the subject to help us all become better dividend growth stock investors together. So, all right, you guys, I want to jump into the spreadsheet here where we go over the 60 stocks separated into the 4 tiers, the first one of which is tier 1. This is for the 18 to 30-year-old investors. These are the high dividend growth rate stocks, low yield, high growth. That's what it's all about in this group, because the younger you are, the more time you have to let those dividends grow and compound. So I've sorted this by the valuation tab. If we have got stuff showing up here in green, it means it has hit that 30% mark, which means that the current day yield is at least 30% higher than the 4-year average yield, which is when I want to swoop in and make my purchases, because I'm getting more bang for my buck when the current day yield is a lot higher than the 4-year average yield. United Health, Nike, Nordson, these have been the 3 dogs in this category for a while. I love the buying opportunity on all 3 of these still, especially the younger that you are, because not only are you looking at getting a pretty decent starting yield with all 3, especially United Health at 2.8%, but plenty of opportunities for dividend growth over the long term. Tier 2, age 31 to 41-year-old investors, a little bit higher starting yield among this group of stocks. Instead of looking at like 1 to 2.5%, in this group we're looking at more 2 to 3.5% starting yield. The growth rate on this group of stocks is probably going to be in the high single digits cumulatively year over year, with the tier 1 stuff comfortably above 10% on the growth rate. Tier 2 stuff, high single digits. Three stocks in this category in that buy zone: Target, American States Water, and Hershey, still just barely holding on by its fingernails in the buy zone. Also keep a very close eye on the next four stocks in this list: McCormick, NextEra Energy, Starbucks. All three of these getting very close to buy zone range for me. McCormick and NextEra right around $70 a share. That's when I want to start adding into my position if I can get these for 70 or less. And then Union Pacific, one of my top 10 favorite dividend growth stocks. Not exactly a screaming value, but at 12% above the 4-year average yield of 2.23%. I'm pretty happy to buy Union Pacific at 2.5% yield or better. So this is one that I'm probably going to add, maybe just a little bit of money to this one just come Monday, just to say that I did. And, you get a platform that allows for fractional share trading and no fees, like your SoFis, your Robinhoods, etc. I might just be on one of those platforms. I just go in there and throw, 20, $25, $30 into that Union Pacific position, just to add a little bit onto it, help it to continue to grow, because that's going to be a hold almost certainly forever position for me. Tier 3, age 42 to 53-year-old investors. When I turn 42 years old in November, I will be graduating into this tier, meaning that I'm not going to be selling the tier 2 stuff. I'll just let that stuff sit and drip and grow over the long haul. I'm going to start adding to this stuff, though, because at 42, I want to get a little bit higher starting yield. Still 3 to 4.5% range starting yield with the growth rate in the mid-single digits. We'll get the job done in this group. Hormel and Pepsi, two high priority ads for me, almost regardless of age tier. Pepsi, another one of my top 10 favorite dividend growth stocks in the buy zone, yielding nearly 4%. It has yielded above 4% in previous weeks here. I have been loving adding to my Pepsi position, getting a starting yield that high. Hormel recently crashed and burned. Bad quarter of earnings, not a lot that people were particularly excited about. I believe the dividend itself is still safe and is likely going to be increased. Probably not by a whole lot, probably looking at like a 1, 2, maybe 3% increase at best, but starting yield above 4.5% on this dividend king. I'm okay to get paid a lot to wait on this one, you guys. More than 50% above the 4-year average yield of 2.94%. I'm kind of all about buying this one right now at this price, regardless of your age. Tier 4, age 54 and older investors, we're wanting to get higher starting yield here. If we haven't hit financial freedom at this point in time, and we're still striving to achieve it at age 54, not as many decades left in the market for those dividends to grow as your 24-year-old or 34-year-old investors. So you can start switching into stuff where the growth rate isn't as high. We still don't want to throw growth rate out the window. I still want to get like 2, 3, 4% dividend growth rate on average year over year out of this group of stocks. Help me keep up with inflation in a normal year of inflation. The high yield stuff continues to be pretty much overpriced. Essex Property Trust, a REIT, real estate investment trust, that's our most undervalued one in this group of 10 stocks. Not a bad buy here, 3.83% starting yield. 3.47% 4-year average. Essex is going to be one of the stocks in this group of 10 that helps the overall group's dividend growth rate more, because Essex has been pretty consistent about increasing that dividend year over year between 4 and 7%. They are a dividend aristocrat. They've been doing it for more than 25 years. So not a bad one to keep an eye on. I own any real estate investment trust that I have in my Roth IRA. Just because the tax advantages in the Roth IRA and real estate just makes a lot of sense. I don't think I'm going to be adding to my Essex position in my Roth this week in particular, but if that starting yield starts to get north of 4%, I will come back and take a look at that once again. Quick look at my top 10 favorite dividend growth stocks. Not a new group of stocks. These are all somewhere between tiers 1, 2, or 3. Pepsi was the only one that was clearly in that buy zone. Union Pacific is about good enough for me. I'll probably add to it. I've been adding a little bit to Procter & Gamble recently when it was down in the $150-ish a share range, the mid to low 150s. It's recovered enough. I'm probably going to pump the brakes down on Procter & Gamble, not add more to it unless it dips back down a little bit more. So now we can talk strategy here, you guys. This is kind of how I would prioritize things, depending on what my age was. Hopefully, this will give you all some ideas for like money allocation and whatnot. Like I said at the top, I'm going to put 50% of my new money each week into ETFs at minimum. So that way I have automatic diversification. Doesn't matter what I'm doing with my single stocks. I'm not going to worry too much about diversification in that particular category because I've got the diversification that I need if half my portfolio at least is in ETFs. Now, for me, because the ETFs, your suite of quarterly paying ETFs from Vanguard and State Street and BlackRock, Schwab, a lot of these really popular ETFs, your SCHDs, your VIGs, your VOOs, VYM, a lot of these are going to be hitting their ex-dividend date and paying out their dividends toward the end of the third month of each quarter. September, the third month of quarter 3. We've got ex-dividend dates coming up. Not a ton of undervalued stocks. The markets are pretty healthy right now. I might be doing more than 50% allocation into ETFs for this week in particular, just because I've been kind of hitting the same stocks over and over again for a little while now, building up those positions. So this could be a week for me that I do more like a 75% overall allocation into ETFs, just again to get that diversification, take advantage of some upcoming ex-dividend dates. But this is how I would be handling my ETFs in each of the age tiers. A 25% allocation in tier 1 would be going into the S&P 500 with 15 into a small cap value and 5% into VIG for dividend growth, 5% into VYMI for international. Tier 2, same for different weighting, different allocation on the new money moving forward. Tier 3, the trio of SCHD, VYM, DHS makes up most of that. And then Tier 4, check out the playlist, you guys. I've got a few different videos regarding income seekers and ETFs. This is where I have landed on. It's a wide allocation, 5% allocations into 10 different ETFs. Really like this combination for a lot of reasons, you guys. But as far as the stocks go, for the tier 1 folks, my top priority would be United Health. That's the most undervalued stock in my tier. Pepsi, very undervalued, top 10 stock for me, so I'd be looking at that next. And then Nike, Nordson in my own tier, Target and Hormel yielding 50% or more above their 4-year averages in the other tiers would be the other ones I'd be taking a look at. Within tier 2, Target, of course, getting a lot of attention there. Pepsi, once again. United Health, AWR, Hershey, Union Pacific, Hormel would probably be my order of attack on these from top to bottom as far as my priorities were concerned. Tier 3, Pepsi and Hormel would be making up most of my allocations to single stocks this week. Target and UNH down in tier 2 and tier 1 respectively. Could be some that I could find a little bit of money to add to. And then with tier 4, nothing to buy within my own tier, so I'd just be doubling down on all these high income ETFs. With the exception of VYMI, I don't double down on my international investments. I keep that at 5%. I'd probably throw that extra 5% left over at Target, yielding in the high 4s, good enough for a current income seeker. So that's another video for the week, you guys. What are you all buying? Let me know down in the comments below.